Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, for another YouTube video. Hopefully you've all had a wonderful Wednesday so far. This is going to be our daily cryptocurrency market update, and we are going to get into a little bit of the charts, but really this is going to be a predominantly news-focused video. We've got lots of articles to get into. We know we had a new high for CPI for the UK in terms of, this is how they're monitoring inflation. Came out at 9.1%, a new 40-year high as food and energy prices surge and persist to the upside. We're going to get into a number of other things. Really one thing that I try and highlight on these videos, I've really been highlighting for the past months now, is just how much risk there is on the table in regards to markets, the economy, and really the state of the financial system. You guys know I'm a massive believer in cryptocurrency. I really do believe that blockchain is a technological revolution akin to the internet or the PC revolution or the motoring industry or the railroad industry. These are all revolutions, technology revolutions that we use on a day-to-day basis now, but at the time would have been met with a large degree of skepticism. I think blockchain is very much the same thing. But with any kind of emerging market, there's growing pains. We are kind of adhering to the macro markets at the moment. Bitcoin is very much acting like the tech stocks. And I see a lot of risk for the tech sector. Essentially Bitcoin, and this is one thing that I am going to continue to say until it sinks into people's heads, because I still see people using historical data to try and call bottoms. The issue you've got with the historical data is we have historically never faced something like this for Bitcoin. Bitcoin was born in 2008. And essentially, if you look at what markets have done since then, this is 2008 over here where I'm highlighting with my cursor. They've just gone up and in a straight line. Bitcoin has only ever had to deal with that. We are in a serious risk, I think, of doing something similar to what we did in 2008, where we smashed through this 200 moving average, or prior to that, even more similarly, the dot-com boom. And after having a similar kind of prolonged period of just continuous upward movement. This is the risk. And that is, for me, you guys know my position. We're majority cash position, majority USDC position. Ultimately looking to get back into these markets. And it's something that we're paying attention to in my Patreon. For anybody that's interested in joining, there is a link in the description. So let's get into a little bit of the news. That's really what we've got for the charts. Maybe dropping down quickly. We've previously also said that, look, you're now in danger of just ranging again like we did over here. We've said when we broke down to 17K, the real telling point is not calling that a bottom, but seeing what happens around it. You don't just want to jump into the water until you can see what's below you. You know what I mean? You don't want to be jumping onto a shark or, anything like that. So, are we now going to set up a bear flag? Are we just going to range and do a bit of a cliff edge? Or are we going to maybe see some sort of a more aggressive upward move, and then form some sort of maybe like a rising wedge or something here that we spill to the downside from? But for me, the risk is all still to the downside. We're very much doing a similar thing to what we've previously done. We're not seeing real momentum and volume come in here, in terms of we've not seen a shift from the sell pressure to the buy pressure yet. Doesn't mean that we can't see some sort of pump. We had said that, look, given where crypto is, given where the tech stocks are, it's been pretty brutal and we haven't seen much relief yet. So there is always the possibility for relief. My concern is, though, that relief eventually gets killed off given the kind of gravity of the macro situation. Let's get into a little bit of the news, guys. The SEC, Hester's Peers, opposes crypto bailout. Sam Bankman-Fried didn't get the memo. Yeah, absolutely. I don't actually believe that we should be bailing out stupid projects. I think that there's something natural with markets in the way that they cull off bad actors. Good money drives out the bad, or that's theoretically how it should work. And I really don't think that we should be bailing out failed DeFi projects, because it's kind of the natural cycle of things. Things have to die to make way for the new, really. We shouldn't be bailing out badly constructed projects and projects that have taken on way too much leverage, way too much risk. It's not, we shouldn't be in the business of saving bad actors, I don't think. But Sam Bankman-Fried, I think, has stepped in and actually bailed out a lot of the crypto space simply because of the price cast, things were looking like they were going to get real nasty, and that still could be the case. We're going to get into an article from Arthur Hayes talking about this in just a second. So we had the UK inflation numbers, 9.1. Really, really bad. Again, this is actually probably why the likes of the FTSE and the futures are closing down. You know, FTSE's down today. You've also got your S&P futures, your E-mini, also coming off. This is probably on the inflationary print that we got for the UK. But I am keeping and paying very close attention to the likes of oil, to the likes of nat gas, which have come down significantly. You know, how's this going to affect the new CPI print? Does that mean we have a lower print? Markets would probably find relief on that, even if it was, you know, marginally lower, because we're getting to that point where everyone's going to continuously call peak inflation, even though it may not come, and we may move towards a sort of stagflationary period. Lots of people also coming out and saying recession isn't inevitable, it's not likely. I don't know what data these guys are looking at, you know, and whether they actually can look themselves in the mirror and say that, or whether they can just say it when they don't have to view themselves saying it. It doesn't make much sense to be calling or saying that a recession isn't likely, given everything that's going on. Talking about everything that's going on, the world's second largest 10 trillion bond market is blowing up. Yet all FinTwit can talk about is crypto. Yeah, we've spoken about the bond market. We had Francis Hunt on, who was essentially calling for the end of a 40-year bull run for the bond market, and obviously a bear market for the yields. So obviously, if you invert this would be the bond chart, basically. This was essentially, or potentially could have been, a cycle ending event, and we're now going to get a reverse of that as we see the failing of the debt system. And this is why, again, another risk element which we're looking at when we're talking about investing, you know, in this market. And there was a real shame. One thing that I'm doing a lot of at the moment is volume analysis. And this would have been key. You know, if I'd only been paying more attention to volume analysis, I'd have seen that the high that, you know, getting out actually in January 2021, when we sort of put in this marginal high here, you know, when you saw this lower volume print, and you actually made a new all-time high, that's a huge divergence, which shows that the trend's weak and prime for reversal. So these are things that we're looking at moving forwards. Let's get into a little bit more news. Dow's future declines more than 400 points as market rebound fizzle. So yesterday it was Dow futures up 400 points. Today it's down. This is just the nature of the beast that we're in, the nature of the market that we're currently in. This is from Arthur Hayes. Beware of forced sellers. An interesting state someone pointed out to me. This is BTCC, Purpose ETF, puked 24,500 Bitcoin into the North American Friday close. I'm not sure how they executed redemptions, but that's a lot of physical Bitcoin to sell into small timeframes. Absolutely. Now we know we had the crash over the weekend following. Over the weekend, while the fear rails are closed, BTC dropped to a low of 17,600, down almost 20% from Friday on good volume. Smells like forced selling triggered a run on stops. Did indeed. You can also see the volume profile here showing that, you know, you've still got quite a lot of strong sell pressure. After the seller dumped their bags, the market quickly rallied on low volume, given the poor state of risk management by crypto lenders and over generous lending terms. Expect more pockets of forced sellers of Bitcoin and Ethereum as the market figures out who is swimming naked. Absolutely. Is it over yet? I don't know, but those skilled knife catchers, there may be an additional opportunity to buy coins from those who must whack every bid, no matter what the price. So this is what I'm still looking for. That's what I'm talking to people about in my Discord or on my Patreon group regularly, you know, regular updates on it. We're looking for lower prices. We ultimately think that this market is set to go lower. Doesn't mean that it can't rally in the meantime. You know, we can't see some sort of relief rally, but ultimately I think this market bottoms lower than where it currently is today, or potentially lower than 18K, which is where we wick down to. That's what we're looking for. That's when we're going to get into altcoins. That's when we're going to get back into Bitcoin. Although I don't think as many people are going to be buying Bitcoin as previously. It seems that the newer people to crypto, that the lure for Bitcoin really isn't there, which is fine. You know, it's up to individuals what they want to invest in. Crypto lending platform Maple Finance, latest to warn to warn of insufficient cash amid turmoil. Backing up what Arthur Hayes was saying, you know, we've still got a really tricky period ahead of us. There's nothing out there to suggest that this market just does a 180 and flips bullish. We'd see the volume. Certainly something I'm watching is that bullish volume coming back, and with size indicating, you know, I want to see sell pressure or selling volume subside, and I want to see the first signs of buying pressure starting to take over and a real volume reversal take place. Twitter board recommends shareholders vote for Elon Musk's takeover. So I think he's actually got through to this. This would be a good thing in terms of crypto adoption, as we would see some sort of an integration crypto payment system for Twitter. You know, there's a reach of 1 billion users. Great way to gain more adoption for the crypto space. I'm not a fan of Elon Musk's involvement in crypto at all. I think realistically choosing Dogecoin, I get that it was kind of a bit of a joke, and you know what I mean, but you could have put your attention to far more superior cryptos and helped them gain adoption to change the world, rather than promoting Dogecoin nonsense. It just seems like a real wasted effort, in all honesty. Yes, okay, right, Dogecoin's done very well. You guys know we weren't on the Dogecoin train as a cryptocurrency. I've done deep dives into it. It's a very unimpressive crypto. There's nothing impressive about it. It's you know, however, through Elon Musk's kind of involvement, it's done very well, which is fair enough. At the end of the day, I don't decide what does well and what doesn't. Markets do. But I think his involvement in crypto overall has been not a huge success. Yes, Tesla buying Bitcoin was massive, but in terms of pumping Dogecoin and promoting Dogecoin over other cryptocurrencies that have a real chance to change the world, seems like a bit of a lost cause to me. Anyway, that's all we've got for you in this video, guys. Hopefully you've all enjoyed this content. If you have, a like is always appreciated, so is a comment. I look forward to seeing each and every one of you in the next YouTube video. Thanks a lot for watching, guys. See you in the next one.